As you've probably seen, Bitcoin disconnected from stocks and DXY, the dollar strength index, a few days ago, and this time it's in the upwards direction. And interestingly, this happens right at a super key support. If it holds and rallies, this becomes a fulcrum bottom, a powerful bottom in the chart. And if it breaks down, we get a head and shoulders continuation pattern. And with the trend this solid down, that is high confidence for further downside. If it breaks down, because it hasn't yet. So something is happening now, my friends. I for myself have a very clear path forward. Is it a bottom, or is it a fake, or is it an exit pump? Let's try to find that out in the next 5 to 10 minutes. That's all we need. Facts are, the economy is garbage. COVID panic led to lockdowns, which led to companies and people facing economical hardship, which led to money printing and stimulus, which led to inflation, which now leads to Fed tightening the rates, which in turn will lead to much bigger economical problems. The causality here, the link between cause and effect, isn't Putin. That's a scapegoat. This would have happened regardless. But that's all history. Right now, everyone is fleeing to safety, which is the dollar, which then pumps like crazy. But all this does not mean that we can't get major pumps, especially in markets like Bitcoin, where order books are so thin and there is room for so much manipulation by large players, and where it takes so little to turn everyone from doomsday bearish to moon boys and moon girls again, which can then fuel any pump and exit liquidity if someone big is doing this intentionally. I will share what criteria I will use. The candles here are Bitcoin, scale on this side, the orange line over here, that's the inverse of DXY, so that it moves in the same direction, easier to see. And the light blue or cyan line is Nasdaq. I use that instead of S&P 500 because tech stocks are probably the most similar to the crypto market in terms of risk appetite and a lot of other factors. And as you can see, since mid-July something, 1 through DXY and Nasdaq have followed each other exactly, together with Bitcoin. But here somewhere, maybe 5 days ago, Bitcoin started deviating from its bigger brothers and has rallied, even though DXY made new highs and stock market new lows. And this is extra significant because it happens right here at the key support level. And as I mentioned, this is an unconfirmed head and shoulders pattern. And where this head and shoulders becomes invalidated and instead becomes a bottom pattern, where is that? You should know that by now, guys. It is if we pass above the right shoulder, which is around here at 22,600. Price as I'm recording this is 20,230, so about 2k up from here. Depending on how we get there, there also won't take that much for the trend to turn up. Where my proxy for trend is Larsen line, as you know. It will take much less for the trend to turn up now than it would have, say, back in June, when the price was exactly the same. That's how these things work. A longer consolidation which doesn't continue to make lower lows builds a base. Then it takes less to turn the trend back up. If we get the bullish chart construction and the trend turns up, I'm going to try, guys. Now everyone on their dog agree that we will go to 13-14k or below. Then perhaps we get a major rally instead to liquidate all those people. And then perhaps turn down. That would seem a very possible development from here. DCA and HODL and so on I think is a very risky strategy at this point in the market. It's easy to find yourself with average cost of entry massively higher than the market value, and then all those DCA entries, maybe over several years, turned out to be almost pointless. I really don't get why so many people think it's a good idea to hold entries like 80 or 90% down. Statistically, you'd get so much better results by just putting simple stop loss on each entry and only hold if it goes up, not if it goes down. Also, we don't know how much it could drop this time. Just because it dropped 85% last time doesn't mean it can't drop 95% this time. That's the big difference between these methodologies. And as discussed yesterday, we are approaching a macroeconomic environment that has never existed since Bitcoin was created. Unimaginable things can happen. No one knows what the next few years will bring. And then I think it's important to have a methodology that protects us regardless. We have to imagine impossible scenarios, not imagine what already seems possible. Then no imagination is needed. Now is not an easy stretch in the market. Here it was easy. Clear entries, trend up, buy and hold, buy more and hold, and be happy. But now it's hard. I'm excited because we've been extremely well positioned here throughout 2022. Process giving exit at 49k in Bitcoin, for example. We have preserved our capital, which means we have inventory to play now. If you're trading based on Twitter sentiment or what they're saying on CNBC or based on your gut, you will get it wrong. Not 50% of the time like a random distribution, but most of the time. That I can almost guarantee you. Because if left to our gut, we feel the most positive at the top and the most bearish at the bottom. That's why it is the bottom. Anyone can make money in a 12-year bull market. This is S&P 500, 2010, 2022. It's a straight line up. It's been too easy, guys. This stretch of the market is hard, especially when we go into something like Bitcoin where there is the manipulation aspect on top as well. You need a methodology. If you don't like my process and toolkit, don't use it, but then you need to get another one. I will take down the course and process on Thursday this week, so giving you 48 hours notice. I'm sorry for the timing actually, now that the market is getting interesting, but we need to change the accounting system from Q4, so I need to do it, and I will also take that chance to review the price. I feel maybe it's gotten too cheap now because of inflation and I've added in so much stuff. I've kept this the same for almost 4 years now, and this is not per year, this is a one-time investment. And then you get 5 things, I haven't even written it out here, I'm the worst at marketing. Number 1, the 21 episode course, that's what you actually buy. Number 2, then you get my process, the one I use myself. Number 3, large online indicator. Comes free. Number 4, my weekly TA report every Friday. It's 10 pages. I write it every Friday. I've never missed it even once. And number 5, now we've also added in access to the Discord server as well, also at no extra cost. Many others charge $100 per month only for access to a report and the Discord. In a year, that's $1,200. We've had members for 4 years now. That's $4,800. I'm giving that for free with the course. And personally, I hate subscriptions. If you're going to be an investor, then don't live paycheck to monthly expenses. Instead, you invest once and then the benefits accumulate. At least that's what I like, so that's what I will do. So, ctolarsson.com gotten too cheap now. Haven't decided on that, but I'll leave it like this until we take it down on Thursday. Also, I want to make it absolutely clear with Bitcoin. I'm not jumping the gun on this one. I will wait for confirmation. I will use stop loss on entries. I'm not interested to risk any capital here. And if this support breaks down, we have a super clear downwards confirmation. Then holding in a solid downtrend just after a confirmed head and shoulders pattern with the world market in the trash can would seem a very risky thing to do to me. I'm not your financial advisor, I can't tell you what to do. I can just tell what the chart construction is using technical analysis that goes back to the 1930s. I'm just saying, be aware of these factors when you make your plan. But this parabola in DXY won't continue forever. This will fall back down at some point. Either right now, or perhaps it runs a little bit more towards this 120 resistance level that comes from here, and either it gets front run a little, maybe turns at, I don't know, 117 or something, or it overshoots a little, but I don't think it will continue forever. Forex are not like tech stocks, where it can go up with no limit. That's why we have a process for tech assets. The indicator isn't the process. Forex needs another process, relying more heavily on chart constructions. So please don't confuse the two. I'm going to sign a second office on Thursday, because this stuff out here is getting ridiculous. I hope you're excited, guys. This is not the time to get depressed and give up as an investor or trader. This is the time to perk up, start paying attention, sharpen your sword, get the dragons out of the pit, feed them some goats, and get ready for battle, guys. It's going to get dirty, so have a plan before you step out on the battlefield. If the enemy does A, you hit him with B. If the enemy does X, you bring down Y. Be smarter, have a better plan than they do, and stick to it. Don't swagger out naked in the middle of the field with no training and hope for the best because some anonymous guy at the tavern last night said that was a good idea. That was not your friend. You need to have your own plan. If you have that, you will probably beat 70, 80 or even 90% of people because they don't have any plan at all. And that might feel good, but it's not really enough because those 70 to 80% of people don't have much money. If you want to do really well, you also need to start beating into the remaining 10% of people because they have almost all the money, especially in crypto. And I can assure you, they have a plan. And especially don't hodl all the way down, losing almost all your money and then sell, giving up at the bottom because you lose interest in the markets, and then FOMO back in at the next top 2 years later. If you can just avoid that, you'll do better than most people. And for people here who don't like hearing that effort is needed and that this is harder than it seems, well, they probably won't make it in the long run. In cases like that, I actually advise against investing or trading anything, or at least do it with very small amounts until they have a few scores and some actual battle experience. Because only then you are motivated enough to learn, to practice, to go out on the field and win. Because make no mistake, if you buy and sell today, there is somebody else on the other side of that trade doing the opposite. And odds are that that person has a lot more money than you do. And they have a plan. And it's good. Don't underestimate your opponent. Respect them. And then beat them. Thank you, tack. CTO Larsson out. Hej då!